All right, guys, good afternoon. This is Christian from Hertz, of course, Tribeca Trade Group, and it's Monday about 2:30. So we've got the day off today for holiday, a nice chance to kind of go through some charts, and a nice, I think, always to get away from the screens for an extra day. I see a bunch of people on Twitter that are like missing that the market is open. My perspective always is it's great to have a day off here and there. It really gives a chance of just kind of digesting, right? We talk about that a lot sometimes in price action, but I think also, you know, just getting away from the screens a little bit always adds perspective, right? On like what you're doing on a day-to-day basis. Just the overall market gives you a chance to think a little bit. Sometimes when we're just watching numbers, like option flow come across the screen every day, we're not really thinking, as much as we should be. So I always enjoy a little bit of time off away from the screens because I really think it just adds to that perspective and gives you a chance again to just kind of think a little bit. So that being said, I've had a chance to kind of go through some charts, after watch some football yesterday. It looks like we're going to have a pretty good Super Bowl. Uh, you know, for the Giants, as bad as they are, it's nice to have a couple good teams. San Francisco versus Kansas City. I'm excited. Two younger teams in there. The Patriots aren't in there, giving somebody else a chance for once, which is nice. So I'm excited. All right. So I've got like 11, 12 things on here to kind of watch for the week, or just to kind of things to think about now that we're, you know, basically approaching the heart of earnings season. And yeah, I'll go through this step by step. I'll talk quickly because I don't want it to be a super long video. Uh, and we've got the member watch list too, which I'll go over levels to watch. I've got, I think, 15 or 16 names to go through. So, not as many as we had in the last couple weeks prior to last week. I think last week I only had 15 names too. But the weeks prior to that, like I was running at like 25, 26 names every week for like the last 2 or 3 weeks. And then last week I kind of brought it down a little bit to about 15 or 16, and I got the same thing going on this week. And I'll talk about why I only have that many names on here. So as I'm going through, I'll kind of jump around a little bit, but let's start with number one, right? Earnings. I left number one in there from last week. I didn't really touch it too much. And I wanted to address, like last week, I had a couple of the same bullets on here, and noticed the market, continued to rally last week. Even as we got through basically all of the financial, but the majority of the financials, there's still a lot of small banks that are going to report. There's still the insurance companies that are going to report, but the big banks, the big money center banks, they're basically done. Right. And I think overall, the takeaways from that, from the banks reporting, and then we got to some of the transports reporting, is that the banks, and I know like, everyone's going to focus on, just like they do on Twitter, they focus on the winners, right? They don't focus on the losers. But I think, if we look at the XLF, which is mainly, remember the XLF was reweighted a couple of years back, notice it did not break out last week. And I think the reason why is because you had some mixed results. Let me just make sure I'm recording here. Yeah, I'm recording. But you had a couple names that did really well. Goldman reported they did well. Morgan Stanley, I think, was the best of the best, and I think they, as well as J.P. Morgan. J.P. Morgan was the first one that reported, and they had a good report. Notice they did not break out either on that report. They almost did the one day intraday, but they didn't break out. That's a name I would watch. Maybe I'll put that on the watch list, but that's kind of interesting. But then you also had a couple names, like you had a couple duds. You had the Bank of New York, Mellon, that did this. That was probably one of the worst ones I saw. Um, you had Citigroup, which was fine, and I think Bank of America was fine too, which goes back to my thesis that most of these banks, they don't move that much on earnings. Even that I was shocked because I hadn't looked at a JP Morgan chart, but JP Morgan had those great results and they didn't move either. So an earnings trade would not have worked, even though I would have thought it actually did. But looking at it, it just did not close on the highs. the day of earnings. What was this, on the 14th? And actually came in pretty decently. So that's just how the majority of the banks. Again, trying to find that one is difficult. But the point that I was making is that I think you're going to have this type of thing happen in some other sectors. You're going to have some names that don't do much. You're going to have some names that miss, like Bank of New York Mellon, and you're going to have like one or two break out. I'm starting to feel like that's what we're going to get. But again, banks are a little bit of a different animal, but just kind of judging the first one out of the gate. So we'll see. Netflix is going to report on Tuesday. Whatever Netflix does, I don't think like it's going to be the same thing as Google. I know it gets lumped into the FANG stocks and like what the FANG stocks are going to do, but I don't think like it's going to have much correlation with the other FANG stocks. They're just a different business. So either way, if they blast out to the upside or if they end up missing, people are going to make a lot of judgments and say, oh my God, this is what's going to happen for the FANG stocks. I would not make that judgment. I just think that they're different. They are growth, but Netflix is a lot different than a Facebook, Google, or Amazon. So I'll move on from that, but I'm going to continue to basically say here that I do think that the indices are in need of some consolidation at this point. I'll go through a couple of these other points, but making sure that you're taking profits and so on and so forth. I do think it's very difficult to swing trade during earnings season. I know we just got to the start of it, now that we've got the banks done, now we're going to get to the heavy hitters, right? So now that we're through the first week, now it's going to be the bigger companies. Taiwan Semiconductor also reported last week. What did Taiwan Semiconductor do for earnings? Nothing. Basically, they put up a really good quarter, and it's why I bought some Taiwan Semi after they reported. But this could be what we get, right? We could get a name that reports solid numbers and it doesn't go anywhere. So again, this is kind of where I'm leaning for this quarter. And I think what will happen is if you miss, you're going to get this reaction. You're going to get smoked. You're going to go down to 40, 10% move to the downside. So even though again, the banks are a little bit of a different animal than tech companies and healthcare and so forth, medical devices. But I think there's some lessons already from the first week, because if you're going to miss at this point, you're going to get hit. And if you do, have a good quarter, you could get this reaction too, which is nothing. So that's why I think, going back to what I've kind of got laid out here, is that like pressing to the upside here, I do not think the risk to reward is a great setup. So let me jump to the next, which I want to talk about the indices, right? Because that kind of just, nails down my point here, is that we're pretty overbought, right? We're at a 76 RSI. I'm waiting for some consolidation a little bit to, that's why I've been doing things like locking in profits. I've mentioned that. I don't usually mention that in the trading room, but I've been mentioning, hey, take some of this money off the table. It's been coming pretty easy. I see a lot of people on Twitter. I know it's just the behavior of like the beast, right? Everybody's acting like they did like a magic trick because they picked a couple stocks and it went up. I like what a lot of people are saying, with some of the other traders who have been around for a while. They're like, guys, this is not, you're not rocket science here. Everything's going up here. Take it as it is, right? This is how we kind of work and play the game, making money and then taking some of the money out when things get a little bit euphoric, which I think that we're doing. But just because we've had some really nice trades in the trading room and some of the watch lists that I've provided the last few weeks have really outperformed, I'm not pulling rabbits out of hats here. This is just what we do on a daily and weekly basis. And then you have to be smart about it. Not get too involved with, don't get, I think a lot of these people on Twitter who are like giving themselves like acting like they cured cancer. They're really getting overconfident, thinking that their abilities are a lot better than what they're actually doing, right? So again, it's great. We're seizing on the opportunity with the market going up, but I think at this point, locking profits up, and then what I'm looking for at this point, right now that I think we're stretched. Interesting that I've had this trend line drawn in here for a while as well, and it seems like we're butting up against it. But what I'm looking for is this kind of thing, right? Just a little bit of consolidation, a couple of days like this. Notice even back in the beginning of the year, which seems like it's a long ways away at this point, but even this like consolidation for 3 or 4 days and then a move higher. I think that's kind of what I'm playing for. Also, I don't like to really be adding a ton of risk when the 5-period moving average is way above the 20-period moving average, which is what we've got right now. So again, just being sensible, not adding I don't want to add a ton of risk up here, right? I think if we come in a little bit, that's where setups are going to start to really, appear to themselves, right? They're gonna as we do our research, they're gonna jump out at us. The other thing is, so this is the RSI for all these. They're all above 70. That is pretty hot. Now, keep in mind, SPY has been doing that for a couple of weeks. It's been going from 70 to 75, so it's been a overbought market now for a couple of weeks. Also, IWM, which was great to see IWM outperform. Caught a couple trades with IWM. Notice what it did on Friday. Some people think that this may be an island reversal. I rely more upon the value areas, and I see that we've taken out this VPOC. So this was a place for me to shoot for, which I did that in the couple RUT spreads I had on last week. So mission accomplished. Now let's see what this thing does, if small caps can get retake that value area. I personally am not messing with this now that I've got what I was looking for. If it gets back above, and maybe it gets back above this R1 Venom line, then we'll go from there. But I want to make sure, like, if that IWM will get back above like 170, I think this says 170.80, maybe a little bit lighter than that, maybe 170.75. Oh, there it is. I should just take the cursor away. 170.76, right? So that's something to watch for the small caps, but basically got what I was looking for out of that. All right. Focus on, so just as I said last week, I thought the indices were overbought in last weekend's video too. Again, I'll always tell you if I say something that didn't work out, or if it did, whatever. But I was saying last week, I thought that we were really getting heated as well. But I would say, even though I said that, I still focused on setups, right? I still did my homework every night and said, hey, healthcare actually is setting up here. The home builders are setting up here, which I took advantage of too. I had a couple different trades on. I still have TPH, but I took KBH off for profits. Not a huge trade, but I don't like that candle, by the way, on Friday. That's why I don't have this one in the watch list this week, because I don't like that candle on Friday. We'll see if this kind of comes in, but I didn't get greedy. KBH, I made some money on. Purchased this one. Again, that's another example too, a name that had good earnings and it sold off a little bit on earnings. So again, I think this earnings cycle is going to give us opportunities to buy the dip, right? I think if you kind of back off a little bit, and again, I'm not telling you what to do. I'm not telling you to back off. But my plan is, hey, if name has good earnings like KBH had, the market is giving an opportunity, like in here, boom, like I hit this, right? I bought this on the weakness into support. That's what I'm going to be looking for in the next couple of weeks. Same thing with, now I don't know if TSM is going to work yet, but a little bit of weakness, that's what I'm going to be in a strong company. And I would like to see this thing get out of value, but that's kind of going to be my strategy for earnings season. We'll do some more setups, and I'll give you guys ideas. If you guys want any ideas at all for names that are going to be coming up. I'm happy to go through the exercise. What we'll do is we'll calculate the implied move. We'll talk about if it's a little bit more expensive versus what it normally moves. So I'll look at that history for earnings, and then we'll go from there. But I'm going to be trying to, sell call spreads, try to collect a little bit of premium on earnings. But it's going to be a name by name situation. Oh yeah, so we'll focus on setups, like, so the home builders, broke out nicely last week. Also, one of the things that I said last week, which I was right on, this was the conclusion from last week. I said we may either see defensives rally a bit or some other sector rotation. But I think ahead of earnings, pay attention to price and be patient. Marathon, not a sprint. So yeah, I mean, I didn't really play the utilities, but look at what the utilities did last week, right? So the defensives did, along with some other groups like the home builders and some of like the short interest play, names like the cannabis names like that have big short interest, right? So there were those groups that really excelled pretty decently. What did technology, technology continues to grind higher as well, XLK. But again, look, I mean, this thing hasn't really had much of a pullback except for here, and then there's been no pullback in XLK since the beginning of December. So it is tough waiting for some of these pullbacks, but again, I'm going to stick with my thought here, especially during earnings season, and let this play out a little bit. Sentiment. Notice that this city, which I think is much better, as I've said, I basically say this every week in the weekend video, I think that the city market sentiment index is much better than the fear and greed. So we finally hit euphoria. So we've done this before. What happened the last time? I always like to say, okay, the last time the model did this, what happened? So if we go back to, this was April, May of 2019, and if we look at the overall market back then, which feels like a lifetime ago, but right around April, May, we did have this pullback, right? We weren't doing exactly this, but that was at the top. So we went all the way. Remember, this was the swing from the December low, and we had this beautiful run. So do you think this kind of lines up a little bit with where we are now, right? We had this huge where we got panic in December 2018, definitely panic, right? Especially on that December 24th, Christmas Eve. And then we had that huge swing. We didn't get there in a straight line, and we got euphoric. And then we kind of came in. We came in from May for a month. We fell, into support. All right. So what are we doing now? So again, I'm not saying that this is going to happen next week, tomorrow, whatever, but that's kind of telling me that we've had this big run. Lock some in, which is what I've been doing, and what I've been, what I've been doing in my trading account. I also did that in the tactical portfolio, which is, medium to longer term. I took about 10% of that portfolio. So again, I didn't go 50% into cash, but I took profits in some of the things like Visa, which has been pretty amazing. This Visa, I mean, that'd be stupid not to take a target here going into earnings. So things like that, right? I took Apple and Tesla off. Apple, see how earnings goes, and a few other names like Shopify. I mean, it makes a lot of sense to take some profits after a run of some of these. I don't know why Thinkorswim is so slow today, but I'm seeing this a lot. But anyway, so I mean, this thing is pretty, has blasted out and is overbought. What's the RSI on Shopify? 80. So I left Shopify in the portfolio, but it's an 81. So again, just be practical with what we're seeing, right? So I think that gives me a perfect signal to say, hey, be a little bit more defensive with this thing hitting euphoria like it did back here. So it provided a good signal. It provided a great signal as that swing got mature. Will it provide another great signal? I'm playing for that. So again, we'll go back to the S&P. I'll show you where that signal was. It was here. And again, granted, the market didn't fall apart, but it came in pretty decently. Right? So the whole game is profit on this. Don't give back. Try not to give much back on this, because this was tricky, by the way. I remember this last year, right? We had a few down days and it looked like we were going to come out of it, and we stalled again at, I think this is the, what do I have here? 50-day moving average. We stalled at the 50-day moving average and spent another month below it. Now, who knows? I think there was a lot of trade stuff going on there too, so which partially could have been the catalyst, but just be mindful of that. All right. I have locked in so I talked about this already. I locked in profits in both places, my trading account as well as the tactical portfolio. Again, I didn't go all into cash in the tactical portfolio. I took 10% out of that and put it into like a short-term cash equivalent, which is SHY. It's 1 to 3 year treasury bonds. Still want to look at 6 and 7. Don't overtrade. Don't trade just to trade. Be careful with the sentiment on Twitter when everybody's posting that they pulled a rabbit out of the hat because they made a nice trade. Wait for your pitch. Don't get that FOMO just because someone else is tweeting out that they've got a winner and a name. I will continue to look at buying SPX spreads into weakness. So if we do get a couple red days next week, I may try that again. The reason why I'm not looking to kind of sell premium at this point, I just don't think there's a lot of risk. There's a lot of reward to the risk. Like if I sell some out of the money call spreads, which I've done before, the problem is if you do this out a week, right, there's not enough premium to collect for it to be a really good trade. If I go out a couple weeks and do that trade, the market may come in for a couple days and then may break out further, and then that trade, there's just not enough on that trade to make money. What I'm talking about doing, by the way, is like selling like a $10 wide SPX call spread and taking in like $200, and your risk is $800, right? That the market goes through. So I have done that trade in the past. I think now may be probably the better point to do that trade in, but there's just not enough bang for your buck to do that trade. So I don't think, I would rather just wait and be patient with trying to put on a bunch of like short SPX call spreads. So again, I'll take the tact of buying SPX going long if we do get a couple of those days. Ignore the noise, watch price action post earnings. Again, I think I've said that a couple times. Ignore the noise. That's a lot of that on Twitter. That's also, financial media. I would throw that in as well. One of the things that I heard last week was, I think this was Friday, right, where they were talking about how David Tepper and Stan Druckenmiller, basically they had comments from them, and they said, hey, they went long. Yeah, they went long in December. So that doesn't really help you now. And who knows when they decide to take money off the table. They said for now what they're doing, I think I have this up here because I wanted to make some reference to it. They said that they're still bullish for now, right? They're trying to basically ride the horse. I agree with that. I've been trying to do that for the last couple of weeks. And again, that's why this week, we'll let this week materialize, and I'll go, for, looking for some new setups and so forth. And that's why I do have a watch list for you, which is 15 I'm sorry, 16 names that I think are interesting. So I, continue to kind of ride the horse, right, as we have been, but just recognizing where we are. And again, they're not going to tell you when they decided to take profits. They'll tell you 4 to 6 weeks later, right? And that's not going to help you then either, right? So just bear that in mind, right? I think everybody saw this, and yeah, great. They got long in December when, way while we did the same thing, and I think we did that prior, is what I'm trying to say. So that doesn't help. And we're trying to do. I'm trying to do the same thing. I'm trying to ride names and focus on names that are breaking out, but being mindful of the situation that we're in, which is overbought. I wanted to mention this as well, because I know I'm going to get questions on this. The option activity going into earnings. I will tell you my viewpoint on this stuff. And I know some people, I try to provide value where I can, but option activity the day of earnings, or even a couple days before earnings, you just kind of have to learn this by observing. There's very little significance, in my opinion, when they buy calls the day of earnings. Sometimes they know something, they may get it right, but more often than not, it's like 50-50. It really is. So just keep that in mind. So that's not a trade that I will be really looking at when somebody buys calls, that day on earnings. I'm not going to get sucked into that. If it makes sense into a trade idea that I already had, I'll say, oh, okay, well, maybe they were buying calls that day. I think it's the positioning a couple weeks ahead of times. The positioning a couple weeks ahead of earnings, those I think are the smarter trades, not the day before earnings. To me, that just doesn't have, it hasn't worked. And I say it every quarter. If you've been a member, you know that. So I just I say, hey, there's calls on the tape. Note they report earnings in 2 days. I don't take those trades. It just doesn't, they don't pan out more than 50-50. Right? And that means anything. 50-50. I also just put a number 10 in here because, we have some newer traders in the room. And we saw a lot of, people going after names with high short interest for bounces. I wanted just to reiterate my style. Normally, I stick with the trend. So I would say about 80-85% of the time, that's how you'll see me trade. So for example, last week in home builders, just to kind of give you an idea, I'm looking for names and sectors that do this. They digest, and boom, they go higher. Or names that are in uptrends that are digesting and then going to take the next leg, like AMD, which I didn't trade AMD last week, but it's just a good example of what I kind of look for. This type of thing. Move up, digestion, into support, move up, digestion, move up. So why do I focus on this more than trying to get names that are in downtrends? Because more often than not, names that are in uptrends, they stay in uptrends. Names that are in downtrends, they may bounce, but you got to be quick. You got to be really quick, because a lot of times it's a bounce and then it resumes its downtrend. So names like the pot stocks, people, I see a lot of people, they're looking for turnarounds in these names, right? They've been looking for the bounce. Now, yes, you could try this, right? You could try to do this, maybe use the 50-day moving average. But usually this thing, now this looks different to me, right? This is the first time it's got over the 50-day moving average. But I still think that it's way below the 200-day moving average. So it could continue to rally. I think we talked about towards the end of last week, like a level that this could get to, which I think is 2070. But I'm not going to play. This is not my cup of tea, trying to pick the bottom in names. So again, if we can find them, we'll play them for bounces, but you got to be out really quickly, because the majority of these, like Tupperware was one that was going nuts. And a lot of this too is the January effect. But look at this chart of Tupperware. You're going to tell me now it's bottoming. So again, if you caught the day that it was up 6%, or I don't know, 8%, whatever it was, But Tupperware, when everybody's trying to get rid of plastic, I'm not playing this name for. Sorry. So again, so I wanted just to reiterate my stance on. I will play 15% of the time of my trading. I'll try a counter trend trade, but guys, it is hard to say that a name is bottoming. More often than not, they stick to their trend, which in this case for Tupperware is a downtrend. Very important. I wanted to show this. This is the Baltic Dry Index. Notice it's not really, whoops, that's kind of different than what I wanted to show it, but it's not breaking out. It's not breaking higher. It's not confirming. Now, not that there's that much, material confirmation with the Baltic Dry Index with global stocks, but I think what's going on here is the Fed is pumping money in. So you really want to be careful. So again, don't fight the Fed, right? While they're doing this, that's the important thing. But when Powell speaks, be very mindful. Dudley said last week that, hey, they're starting to cause risk assets are going to become a valuation concern. They're going to be watching that, right, in the next couple months. So as they're still pumping liquidity into the system, you're going to eventually hear Powell come out and say, hey, we're valuations and risk assets are getting out of hand. He may say that, right? So I would be cognizant of that. So again, I'm looking for things going forward in the next couple weeks, couple months that I'm a little bit mindful of is when Powell speaks next. Because he may, that could be something that could get the market to move back. And then my conclusion here. I'm going to personally be letting the indices cool through earnings season. I will stay objective every day if I happen to see some really good option activity in a name that I think is setting up to leg higher. I will do that. I also will, from time to time, play a little bit of puts. I did that, and again, I think with puts you got to be really quick, because again, you're fighting the Fed right now, right? If you're playing something to the short side, you know that the Fed is still pumping liquidity in the market, right? So I held those Twilio puts for a day trade, and I held the last piece and got out of them quickly. No reason why I want to stay in that trade for more than that. You're really